So I'm joined by Elizabeth Vermillion, equity analyst at CFRA, to explain why there is now a sell on this stock.
Hey, yep, thank you so much for having me. So yep, downgraded the Caterpillar to a sell this morning. Really our thesis is that we're very, very cautious about cat sales. Previously, we were cautious about cat sales outside of the U.S., and now after this quarter, we're a lot more cautious on inside the U.S. sales also. We see pricing pressure in China continuing through the rest of the year, and the big story is Caterpillar really needs to lower their production to better meet dealer demand, and that's going to be something that's going to affect them all year.
So outside the U.S. and within the U.S., explain the U.S. story and how that decision factored into the sell rating today. Explain about the United States a little more so we understand why.
Yep, so in North America and the U.S. specifically, we still see positive spots in state and local infrastructure spending, but non-residential construction spending is weaker than we were expecting. And so that's a big reason why we downgraded. And we see the production mismatch with dealer demand really driving that weakness, and it's going to continue through the rest of the year. It's going to take a while for CAT to adjust their production levels down to the newer, lower inventory levels that they're going to need.
So when we talk about infrastructure spending, and you said that you had expected more, basically, what do you think is behind it? When you talk to people, what do they say would need to change in order to have you then change your rating back to a hold, at least from a sell?
Well, so we see actually strength in state and local infrastructure spending. Obviously, a large federal infrastructure spending bill is still something that people are looking for. It's unlikely that it'll happen this year with it being an election year, but state and local infrastructure spending is still a bright spot.
When we expand it out, I'm sure you take a look at the group. You may or may not have a rating on Deere or others in the group just to have an understanding of what's going on with building and these particular machines. You're basically saying that Caterpillar needs to slow down production. Do you think that is something that goes for others such as Deere?
I think that it's definitely company to company specific. Caterpillar really ramped up their production through end of 2017 and all of 2018. At that point, they were kind of lagging their dealer demand, and they kept up that production for most of 2019 when dealer demand was actually starting to decline. So that's where the offset specifically for them stemmed from. Other companies had less of a mismatch, but still we are hearing a lot of talk of some lowering production.
Did you feel a little more confident once phase one was signed, and when you watch some of these industrial names? Does it feel a little better, at least, that that's sort of behind us and maybe phase two is underway?
It does help that there's a trade deal signed. It shows that people can come to the table and that there will be some positive things going forward. But I think that a lot of the damage has been done in terms of manufacturing impacts on cost cutting and having to increase prices to offset tariffs and inflation related to all that. So there's definitely been some effects that can't be reversed, but it's definitely good that steps are being made to have a better trade relationship.
Can I just have a quick thought on how strong or weak you think China really is after doing the work that you've done?
I think that it is definitely softening, but it's not in a terrible position. I think that Caterpillar, who has a lot of manufacturing in China, their biggest issue right now is competitive pricing from other China manufacturers. But all in all, demand in China is still strong. There's still building going on there. So really, it's just once they can get their pricing better allocated towards the market, it's not super negative right now.
Thank you, Elizabeth Vermillion at CFRA Research. Thank you so much.